Hello, everyone, and a warm welcome back to our investment notes. Recently, there have been numerous noteworthy developments in the ever-evolving cryptocurrency market. This coming Friday, there will be several asset-related conferences taking place in the US. So today, we are excited to have Christy here to share insights and discuss the current trends and dynamics surrounding Bitcoin. How's it going, Chris? Hello, everyone.
Yes, I'm here to answer questions, not to perform.
That's right. Should we have a conversation about Bitcoin specifically, or can we also explore the broader cryptocurrency market as a whole?
That sounds good.
That sounds really good. So if anyone has any questions or curiosities regarding cryptocurrencies or Bitcoin specifically, please feel free to leave a message and we can have a great chat about it together. I often assist my brother Ryan by helping him with various work-related tasks and responsibilities that arise. Are you aware of what that particular thing is? Sometimes you send important messages to us, and I make sure to pass them on promptly to your subordinates. Then I post them in our WhatsApp group for everyone's awareness. Recently, Christy has been sending us a considerable amount of information, particularly concerning Beacon. For instance, one significant piece of news was that Trump announced on Monday a substantial 20% increase in tariffs on imports from China, which could have wide-ranging implications for trade relations. Following that significant announcement, Beacon experienced a sharp decline in value. If we examine our chart closely, we can see that it had previously risen to an impressive high of 92,000 before this news broke, and then it subsequently plummeted. Additionally, we can delve into a discussion about how tariffs and trade policies impact Bitcoin and other virtual assets in the cryptocurrency market. Since it had impressively risen to 92,000, many people thought it was performing quite well. By the way, did you see any recent news about it? Is the driver part of the same alliance?
It's AI. It's definitely an AI clip.
Hey, when it comes to combat and fighting strategies, the AI truly is something remarkable, isn't it?
Then there's another one. It's Ah Chong holding the Battle Alliance driver's baby. It's also an AI clip. Not sure if you've seen it.
You really watch these crazy things.
Because recently, the U.S. stock market has been doing really well, and the S&P, the U.S. stocks are climbing up, right? When it comes to trading, I understand that JD is really on fire, right? Yeah, stirring things up. People often talk like that just to provoke reactions and stir controversy. However, you see, Bitcoin is performing well currently, but then you suddenly mention tariffs, and it experiences a significant drop. It turns out that its value is indeed closely related to tariff discussions. Additionally, if you notice a particular stock suddenly dropping on Monday, you can promptly check the news or market reports to understand the reasons behind the decline.
Today is February 3rd. If nothing unexpected occurs, it should be around early February when discussions about increasing tariffs on Mexico and Canada took place. Therefore, when you bring up tariffs alongside Bitcoin, you will notice that many US stocks are likely to experience a swift pullback in their value. So if you talk about tariffs, actually it shouldn't have a direct impact on Bitcoin. That is, if you talk about increasing tariffs, many consumer stocks or even some tech stocks might be affected. But for now, if you talk about tariffs, they are mainly on goods, so it shouldn't have a direct impact on Bitcoin. In this particular situation, it appears to be increasingly about global risk aversion, and we are beginning to witness noticeable sell-offs in various markets. Previously, I mentioned that I wanted to inform everyone that upon reflecting on the situation, some of the recent news is largely due to heightened global risk aversion. As a result, it seems the market might tend to overreact rapidly to these developments, causing significant fluctuations in response. So in a way, these actually create some entry opportunities. If you assume that after the tariffs are officially announced, there might be a buying opportunity, it is possible that the price could quickly surge back up to 100,000. Well, then after next Monday, if we talk about it, the figure quickly dropped to 82,000, but then it swiftly bounced back to around 87,000 to 88,000. You can see that in the middle of the analysis, the market appears to be overreacting to certain factors to some extent.
It's similar to what Robert Kiyosaki famously stated. When the financially struggling are filled with fear, that's the prime opportunity for you to accumulate wealth. Coincidentally, he also mentioned that we are currently experiencing a unique price period.
I just bumped into you today, right?
During this unique promotional price period, the two of us were chatting and I casually mentioned the thing that I had reached my limit on.
While it's true that I may have employed similar phrases in the past, there's something unique about the way he discusses this topic. It tends to captivate everyone's attention, causing them to lean in closely. However, it's crucial to recognize that this is an important aspect of investment wisdom that warrants careful consideration and focus. The insights shared are valuable and can greatly influence investment decisions in meaningful ways.
It seems like he went bankrupt. I found a news piece saying that Rich Dad said he would use counterfeit money to buy this discounted Bitcoin, referring to counterfeit money that is US dollars. He also pointed out that the total debt of the U.S. government has surpassed an astonishing $230 trillion. Given this concerning situation, he mentioned that he plans to buy assets when the market experiences a significant crash. believing it could present a valuable investment opportunity.
It appears that the assets are in better condition, but how does he still have sufficient funds to sell them? What does the term bankruptcy specifically mean in this particular context?
Yes.
I'm unsure since I haven't researched it.
I haven't read the book, have you?
I haven't read it. It's book 101.
Do you want to watch it? Do you want to watch it?
You should watch it since you've already exposed many of its flaws. After watching half of it, yes.
In addition to this unfortunate and difficult situation, I just informed Christy before we began that there is some very sad news regarding Kong Kong's son. Have you noticed that every single time he mentions Bitcoin, it seems to actually cause its price to crash significantly?
Is the second one toilet paper?
Yes.
It's definitely related to Eric in some significant way.
Today I came across some intriguing information, and to my surprise, he actually mentioned it 3 different times. I truly believe that this would result in a significant surge in votes, or at least I thought it would. But he said this year he actually called people to buy Bitcoin 3 times, or maybe Ethereum, with a failure rate of 100%. In short, after he speaks the next day, it crashes immediately. Recently, he mentioned a price of $92,000 per Bitcoin a day, and after he spoke about it, he suggested that investors hold Bitcoin for the long term. However, the very next day, the price dropped significantly, declining by over $500.
However, in terms of percentage of market movement, it's not yet reaching 10%, which is considered quite normal for Bitcoin. The reason I inquired about this initially is to understand if it breaks below the 52-week low for Ethereum, as this could significantly impact market sentiment.
Yes, I'll definitely show you Ethereum because it has experienced significant ups and downs over time. The most challenging aspect is that it has fluctuated quite a bit. Currently, its price is at $2,215. The last time it reached a peak was on February 4th, when it soared to around $2,900, but unfortunately it hasn't managed to return to that impressive level since then, leaving many investors anxious about its future performance.
Yes, it quickly dropped to around 2,000. After discussing this situation, you can observe that at this moment, if we continue our conversation, there are actually a noticeably higher number of institutional investors who are increasingly likely to consider buying Bitcoin as an investment option. Even now, although the United States is actively discussing the potential introduction of 5 different currencies as part of its strategic reserves, including Bitcoin and other digital assets, if we include Solana, Cardano, and XRP. However, aside from the ongoing discussions about these currencies within the United States, various other countries or institutions, such as those based in Seattle and other notable listed companies, tend to hold a significantly larger amount of Bitcoin in their portfolios. Considering this, it's clear that retail investors are increasingly discussing it more, yet the focus remains at the institutional level. There may not be as much interest.
However, I would like to inquire about the current market conditions as you also manage that specific ETF investment. What does the overall flow of buying and selling look like in the current market? Are people more inclined to sell their items, or what is the general situation regarding transactions at this time?
If you take into account the significant 100,000 mark, we've observed numerous investors cashing in on their gains, which indicates they are selling their assets. Then it started to gradually drop back down to around 80,000, and it seems like everyone is currently in a hesitant mood to make any purchases. Yes, until recently, the US confirmed that they will push forward, and it seems like the sentiment is improving. However, it is evident that at this moment in time, as we have just begun our analysis, the overall global market sentiment is displaying a marked level of risk aversion. Consequently, there is a significant likelihood that, whether in the stock market or within the realm of cryptocurrency, investors may encounter heightened volatility over the short term, and the recovery process may not be as swift or robust as it has been in previous instances. Even though you can see that the news is positive and policies are starting to roll out, and there are working groups focusing on this, if you look at the timeline, it's clear that a lot of new things should be launched in the second half of the year. Currently, the market shows a clear tendency of individuals being hesitant to invest in high-risk assets due to ongoing economic uncertainty and potential volatility. So everyone can consider this period as a good time to save rather than waiting until it hits 100,000 to say they want to save.
Yeah, we are all discussing this.
So we are saying that we need to avoid, as we discussed earlier, everyone should be cautious because there's been too much news lately and the market can easily overreact to new information, like when Trump mentioned promoting cryptocurrency on Sunday. Bitcoin rises by 10%, while coins like Cardano jump by 60 to 70%. I frequently explain to everyone the benefits of regular investment, emphasizing how it helps to prevent financial difficulties throughout the year. If you are not careful, you might find yourself purchasing too early or at an inflated price. Then when taxes are imposed and everyone decides to sell simultaneously, it creates a rush that makes it increasingly difficult to manage and control the buying price effectively. This scenario can lead to significant losses and missed opportunities in the market.
But sometimes you also need to take a closer look. I just want to ask a question. You should seriously consider what price you believe is appropriate to buy. As I recall during your last visit, you mentioned that you would make a move when it reaches a 100,000. It dropped to about 70,000 if I recall correctly.
Typically, following a new market high, a pullback of about 30% is quite probable, which suggests that the index should settle around the approximate 70,000 mark.
If we say the figure is 92,000, then a 30% pullback would also be quite similar in magnitude.
However, it's a high return investment, which means significant potential gains. So if you're following the program closely, we emphasize that if you really want to wait for a pullback. Then you should calculate a 30% pullback from the recent highs, and those identified price levels should serve as your ideal buying price, which should be realistically achievable, because it once reached an impressive total of around 78,000 individuals.
So, as we are all aware, there will be a significant summit taking place at the White House this upcoming Friday. Chris, I believe you should be informed about who has confirmed their attendance, correct? Yes, it's Michael Sherridge, the highly regarded executive chairman, who will be participating in this important event. I only found this particular item along with a few others from Magazine because there are some ATA products available from Magazine, and is it referred to as RO-ROPI? I'm curious about the naming as well. Is it referred to as ROPI? Is it spelled RIPPLE? Is that correct? I mean, the SRP organization and their CEO will also be there. Do you think these individuals are truly significant players in the industry, actively participating in this important meeting? The market may have certain expectations that something impactful or noteworthy will occur as a result of their involvement.
This summit on Friday is actually the first one organized by the White House. In addition to the individuals you previously mentioned, for instance, the CEO of Coinbase and the CEO of Robinhood have also confirmed their attendance at the event. Therefore, you will notice that there are indeed prominent figures from various trading platforms represented in attendance, highlighting the significance of this gathering. Additionally, there will be a variety of exchanges and representatives from several notable cryptocurrency companies attending. You specifically mentioned XRP, and it's worth noting that ClearZero will also be present at this event. Essentially, you can think of this summit as being the inaugural large-scale gathering for the cryptocurrency industry, bringing together key players and innovators to discuss the future and developments within this rapidly evolving field. All stakeholders in this particular industry should actively participate together. Yes, some individuals are speculating about whether Trump will declare that there is no necessity to impose a capital gains tax on cryptocurrencies. Yes, that's right. These are just rumors, and I think everyone should adopt a wait-and-see attitude. Because right now, you often see discussions about capital gains tax, which actually need to be approved by Congress. So it becomes what I just told everyone, not to overreact to some news. However, I believe that during this important meeting, there could be valuable opportunities to engage in discussions regarding how the United States plans to advance these strategic reserves, as well as when the timeline for these developments will be communicated to all stakeholders involved. If you discuss upcoming changes in policy, the tax adjustments can be confirmed even ahead of the scheduled meeting.
I just came across some information online indicating that there might be several key themes I would like to inquire about, particularly the regulatory framework, which seems to require more clarity. Currently, the details surrounding it are still quite vague and ambiguous, making it challenging to fully understand its implications and how it will be implemented moving forward. Additionally, I would like to discuss the topic of their strategic reserves in more detail. It's possible that people may have some lingering questions or concerns because after you finish this statement, you might witness Bitcoin dramatically skyrocketing to an impressive 92,000, which is undeniably exciting. However, following that surge of excitement, there may arise doubts and questions regarding whether the U.S. government actually has the financial resources available to make such purchases. It's waking up to new financial realities. We refer to this phenomenon as M2, and it could potentially increase further. I just observed that with such an overwhelming amount of debt, it's unclear where the necessary funds are originating from, aside from the option of printing more money.
It's generating cash.
Taxes.
They appear to be increasing tariffs on purchases.
It's for reserves.
Yes, it's for strategic reserves.
For reserve strategy. So the Treasury has money, right? The Treasury issues bonds. Oh, yes. Buying gold is now an appealing option. It can also serve as a valuable part of their financial reserves.
Some individuals have proposed that it could be feasible to sell gold in order to purchase Bitcoin, which indeed offers numerous avenues to alleviate investment pressure and diversify assets effectively. However, at this exact moment, current market trends suggest that it appears there is no available money. There are indeed numerous public months available for utilization, but the pressing question remains, how should we proceed with this matter? So these are the tasks that the working group needs to address.
Yes, so I'm not merely anticipating what might occur when they come out to speak publicly, or what the overall market sentiment could be, particularly since there is already this important meeting taking place, which adds an extra layer of complexity to the situation. After this productive meeting, we might be able to assess how everyone can effectively deploy their strategies, and if there's anything specific we should keep an eye on moving forward. This is particularly important because I see that analysts expect the million mark will serve as a significant support level in the market. If it breaks above the previous resistance level of 78,000, it could potentially drop significantly lower.
However, if you closely examine the chart, you'll notice that the neckline is positioned around the significant mark of 95,000, while the crucial level to pay attention to is approximately 80,000, which serves as an important indicator for any potential market movements or trends.
If we discuss the technical aspects, as Ryan mentioned earlier, while considering the long-term perspective, you can clearly see that various policies are being effectively implemented. Therefore, we should not suddenly expect to witness a significant boom or surge in activity because the entire political framework is undeniably not as it was at the very beginning. Rather, everything is currently being slowed down and is proceeding at a more deliberate pace. I believe that for investors, it's actually more beneficial to gradually accumulate their assets over time. If everything proceeds as anticipated and nothing unexpected occurs, there could potentially be a significant surge in market sentiment on Friday, particularly since there is expected to be some important news announcements that could influence investor behavior and perceptions. Initially, it was anticipated that there would be several important policy announcements made on Friday. However, typically, after the market absorbs this particular news over the weekend, the overall atmosphere of the global market generally shifts to a slightly more risk-off stance. I believe it's wiser to trade gradually, particularly for those who are considering policies that are likely to begin being implemented in the latter half of the year. Are we discussing a year later when the US begins to truly heat up? It seems that timing might be more suitable and advantageous for everyone involved in the conversation.
Certainly. Here's the expanded version of your original text. Regarding Bitcoin and Ethereum, since Mona specifically mentioned that Ethereum's price chart appears to be somewhat weak at the moment, I would really like to hear your thoughts on this, Gucci. I understand that you typically focus on trading Bitcoin, but I'm curious about your perspective on Ethereum's current situation and potential future movements. What are your thoughts on it now?
In fact, as we previously mentioned, we've been actively discussing the current gold cycle, a topic we typically revisit every 4 years to analyze its trends and implications. So, in relation to the ongoing gold cycle, we're specifically discussing the involvement of sovereign nations and various institutional investors in the market. This situation could potentially lead to a noticeable upward trend in various cryptocurrencies. It is evident that a significant number of companies, institutions, and even entire countries are increasingly favoring Bitcoin as a preferred option. So it appears that Ethereum might not benefit from this particular trend as significantly as other cryptocurrencies might. In addition to examining developments in the US market, it is important to consider the performance of other countries' stock markets as well. For instance, today, a notable Japanese stock named Mitsubishi experienced a significant increase of 20% following the announcement of some unfavorable news that caught investors' attention. It hasn't really dropped much. Currently, it's at 88,000 yen and it successfully purchased 497 units of BQ. Today, it impressively rose by 20%. This stock is truly remarkable. It is projected to increase by 12 times this entire year. Last year, its value was approximately 200 yen, and now it has surged to an impressive 4,000 yen. Yes, it has indeed risen significantly more than Bitcoin, and it is one of our promising potential stocks in 371. If you're in the process of buying stocks or even actively keeping an eye on the ever-evolving crypto market, you might not be considering this particular stock at all. This particular stock's performance in 371 has significantly outperformed that of the company MicroSHR over the past year.
Of course, but I apologize. Did you want to add something?
So, we're not just focusing on gold. We also need to consider investment in 371, especially if 371 proves to be a strong performer.
If you consider today's performance like crypto, for example, Bitcoin has dropped about 6%, and actually Ethereum has also fallen around 7% today. But in between, they bought a lot of different blockchain companies. This includes various mining companies, the cryptocurrency exchange Coinbase, the investment firm MicroStrategy, and the previously mentioned Metaplan, all of which are focused on cryptocurrency. Furthermore, they also made strategic investments in established tech companies such as PayPal, Visa, and Libra. Essentially, any venture related to the broader blockchain ecosystem represents a potential investment opportunity for them.
In response to the topic of today's program, it was noted that Achong expressed a desire to integrate these virtual assets into what they consider strategic reserves. This raises an interesting question. If the United States genuinely transitions into a central hub or collection center for virtual assets, can we accurately refer to it in such a manner? This inquiry invites further discussion on the implications and potential consequences of such a shift in focus within the financial landscape. Will this development have a greater overall impact on the entire market, or will it simply increase the volatility?
Currently, beyond the ongoing national level discussions in the US regarding reserves, a multitude of significant developments are also taking place across the individual states. There are a total of 50 states in the United States. In total, 21 states have already stepped forward to propose new legislation aimed at including Bitcoin as part of their state reserves. Although 3 states have officially rejected or banned it, many other states across the country are still actively working on this legislation and considering its potential implications. You know how things often go in the US. If one state successfully approves a policy and it works well, others will likely copy and adopt it. So it's possible that before the national level starts to implement it, states might have already done it. So what Trump is discussing is the idea that the United States is on the verge of becoming a significant global center for cryptocurrency. And this possibility is certainly within the realm of potential reality. However, the issue arises because many people believe that if the US successfully achieves this status, it will undoubtedly emerge as a dominant economic power in the world. However, many countries around the world are also closely monitoring how events unfold. If the US takes this action, it might actually accelerate global progress in various sectors.
I think China is also quite active in this area, or perhaps they haven't imposed restrictions yet, and they are still in the early stages, which might lead to losses. Assuming the US can achieve so much, or if other countries can achieve a lot, but China seems to be holding back. Yes, that's why I say they are still in the early stages.
Japan has already embraced this innovation, which allows them to manage both yuan and Bitcoin transactions effectively. Interestingly, many Asian countries are now reversing their previous positions on cryptocurrency. Considering China's ongoing ban, it's notable that other Asian nations are beginning to adopt Bitcoin more enthusiastically. Yes. For example, Japan and Korea might also have news about Japan's developments. Will Korea also follow suit? So, you see, the United States is actively bringing this important issue to the forefront of the political stage. Will this momentum accelerate over time? Some countries might be hesitant to take action, but observing others move forward with their initiatives could potentially inspire and speed up their own progress. This could create a ripple effect, encouraging wider participation and engagement on the global scale. For instance, if Canada decides to take significant action, there are indeed many individuals of Chinese descent residing in the country. This situation could notably impact Asia, particularly if Canadians begin to actively engage in purchasing goods or services from that region. As residents of Hong Kong, we find this situation quite familiar and relatable. It's a mutual understanding between us. Later on, when you visit a new shop, you might experience a scam, and I just brought that up. Haha. I mean, instead of giving me a collar, perhaps it would be more practical to give me money or gold instead, like a pig-shaped collar to wear around my neck.
What? It might be like that. Actually, there is a specific password that is involved in this process. The password is lengthy, meant for both your husband and son.
Oh, right.
What kind of depression is that? Let's take a closer look and analyze the situation in a bit more detail. In addition to discussing the implications of con, let's also take some time to talk about NVIDIA. NVIDIA has been performing remarkably well lately, as you may have noticed from the WhatsApp image that was shared, correct?
We mentioned Tesla, which everyone commonly describes as very futuristic, but NVIDIA is even more advanced and innovative this year. Tesla's capabilities and innovations don't need much further explanation. We actually had a thorough discussion about this topic last year. I distinctly recall that it was around $3, correct? Additionally, it seems there was also some mention of $2 alongside a figure of $240, which stood out in our conversation. Crypto aids my trading, similar to large tech stocks like NIO and Tesla, which also experience around 70% fluctuations.
There are many facts regarding this, especially when discussing industry leaders.
This also clearly demonstrates that it's not solely the club assisting me in my investments, rather the entire market is actively supporting me and my endeavors.
That's the essence of this world.
I mean, it's the essence after the surge. Exactly.
After the surge, there is typically a considerable amount of news coverage and excitement generated. For instance, just today, I came across the news that NVIDIA is expressing their desire to abolish certain chip regulations that have been in place, which could significantly impact the industry. Additionally, upon reviewing the latest data, numerous analysts are indicating that NVIDIA's current valuation is at its lowest point in nearly a decade, raising questions about the company's future prospects and market performance. Certainly, here's an expanded version of the text. Actually, semiconductor chips are still definitely worth keeping an eye on because everyone recognizes that Nvidia is the undisputed leader in this industry. However, these recent fluctuations in the market seem to make investors quite anxious, so I would like to ask both of you for your thoughts on this situation. What are your thoughts on Nephilia? Although there have been recent news about chip regulations, but do you still believe that the price will drop further to test if it can reach its lowest point, which is around 102? After that, do you think it will gradually accumulate near the $100 mark, potentially stabilizing there for future growth?
After all, they hold an impressive 80% market share in the industry, and they have recently secured approximately 30% of TSMC's production capacity, which significantly strengthens their position in the market and enhances their competitive advantage. Yes, because TSMC's operational model primarily revolves around selling advanced production lines to various clients. Exactly. It seems that there must be a significant demand to package the entire production line, don't you think? It's essential that you get it properly packaged up.
Hey, Gucci just shared an exciting update that TSMC, a prominent semiconductor company, plans to invest at least $100 billion in the United States. This significant investment will facilitate the construction of 3 advanced wafer fabrication facilities, 2 modern packaging plants, and a state-of-the-art research center to enhance innovation and technology development in the region. Then, the prepared individuals are increasingly worried, concerned about the possibility of what might be termed technology theft occurring from Chinese companies after the U.S. appropriates your valuable technology. That's exactly what the prepared individuals are discussing on the online message board.
However, while your company has the capability to produce the technology, it is important to recognize that the underlying technology is ultimately sourced from the United States, correct? TSMC has been well acquainted with this business dynamic for many years and understands the complexities involved in such arrangements.
It's not just this time that they are investing so much. You can see many instances before the chip crisis where they were already in this way. They are now in the process of forming a strategic partnership aimed at strengthening their competitive edge in the technology sector. Currently, TSMC is producing its cutting-edge 2-nanometer chips, which sets them apart, as there are not many other companies capable of such advanced manufacturing. Although Samsung is making significant strides and is considered close in terms of technological capability, TSMC still firmly holds the position as the leader in this highly specialized market. It's akin to examining a single grain of rice. When you apply the percent function for calculations, you're only dealing with a small quantity, perhaps just a few tenths. Transitioning from 3 to 2 is comparable to discussing something as minuscule as a single grain of rice.
Well, today, although I'm not entirely sure why every single time we engage in a conversation about pecan, the time seems to fly by swiftly, I genuinely hope that next time when Chris comes back again, we can brainstorm and innovate new ideas together.
Sure, what exactly are you trading today? Why are you rushing it?
It's not that I don't purchase ETFs anymore, okay? It's just that I haven't been able to find or see them available lately. And sometimes I genuinely believe it's better for my peace of mind not to keep watching the market fluctuations constantly. Sometimes ignorance is bliss after all.
Usually trading in and out is just sitting.
Yeah, I think so too. I've known you for quite a long time now, and it feels like we began our journey of knowing you back when the figure was at 40,000, correct? I distinctly remember that it was 40,000 just last year, and then when it surged from 40,000 to 70,000, I hadn't made any investments yet. It was only when it reached the milestone of 1 million that I truly started to invest, primarily to gain valuable experience and learn more about the process.
All right, because there should be many people in the market right now who are like you, meaning a lot have suddenly jumped from 60,000 to over 1 million and realize they need to get in. It could be viewed as early, as many may only start around 100,000. Enter. Many people are attracted when the number suddenly increases from 100,000 to 1 million.
The sudden drop in value from 100,000 to 1 million can be frightening for new market entrants. I hope the next rise will break through important levels like 110,000 and 116,000. I'm anticipating this breakthrough will happen within the next 10 days. If you calculate it back, it's actually not that much, just about 20%. Plus, if you're used to the fluctuations, it's okay.
Oh, so actually, I think when we first discussed the recent tax news, you can clearly see that the market's reaction this time around is noticeably less intense compared to what we observed in early February. The needle appears to be shorter. Yes. Let the market process this news. With time, it will gradually settle down as everyone digests the information.
No, it should still remain unsettled and somewhat noisy for a little while. All right, everyone, it looks like the time for today's quiz portion is almost at an end. The quiz details should be announced shortly, and just to clarify, I personally do not hold any of the ETFs mentioned earlier in our discussion. Now, please don't leave just yet. Kindly hold on for a moment while we switch scenes, and we will return to continue our analysis. Thank you. Speaking of which, there are also some news about Cheong Kong, which is impressive. This matter is really impressive. We can start discussing it later. It's textbook level, no doubt. We'll talk more about it later. Please wait a moment. See you soon.
Yes, exactly.
Oh, those sleek black cats really like that. Hello everyone, we're back again and excited to reconnect with you all. Now we can delve into a discussion about the stock market and also specifically discuss various US stocks. Essentially, you can feel free to talk about any stocks you are interested in. However, just before we took that break, I briefly mentioned something intriguing that occurred last night. As I was attempting to fall asleep, my phone persistently kept buzzing with notifications, which made it quite difficult for me to relax and drift off into a peaceful slumber. The entire situation revolved around a deal that unexpectedly jolted me awake in the middle of the night. It was incredibly frustrating and disruptive to my rest. I had been trying diligently to fall asleep, but the noise was persistently bothersome and wouldn't let me be. You see, I was in the midst of teaching some news, and it certainly felt like quite an experience. So I'm curious, what are your thoughts on this particular deal? Let's talk about it. Let's begin by discussing the recent developments. Reports indicate that CK Hutchison is planning to cash out nearly $150 billion. What this means is that they sold a portion of the Panama Canal, specifically a section of its operational infrastructure. The two significant ports located at the Panama Canal, yes, those two specific ports. Did you manage to find the names? Are they easy to pronounce and say aloud? Are their names in Chinese? Yes, there are indeed two ports that I can mention. Allow me a moment to locate the specific details for you. Unfortunately, I'm having difficulty finding them, and I apologize for that. The two ports I'm referring to are Balboa Port and Cristobal Port. Since I cannot read English well, I was hoping you could assist by reading the information for me. Okay, but could you clarify which one was sold?
It was approximately 140 billion, correct? 140 billion Hong Kong dollars, if my memory serves me right. Yes, indeed, 140 billion Hong Kong dollars. Although I understand their current market value is now around 180 billion after today's notable rise. After today's rise, it increased by 21%. You mentioned that CK Hutchison's market value is 180 billion. They have already received 140 billion dollars in cash. Yeah, that's right. But actually, you have less, 19 billion USD.
What do you mean by market value? Getting the money back, 19 billion USD. I need to check again because I have too many numbers right now. You can keep talking.
You seem to lack an understanding of excessive zeros.
Yes, I really have no concept of money at all. But hey, some people are wondering if they would be afraid of losing $25 or something like that. And there's something everyone wants to know, like finding this backlog to buy. Will there be any valuable insights accepted from you all, or is that not going to happen? overindulging is like having too many conspiracy theories.
Hey, they sold it. Not that they sold 10 billion for 19 billion USD. You want them to just hand it out to you just like that. Giving it back to shareholders, that's not really right, actually, I think. So you look at the brokers, but brokers see it as a positive factor, and the reason is 17.9 billion USD.
19 billion, that's right, 19 billion indeed. Yes, I just performed the calculation. Continue.
How will you revert it to HKD? HKD is derived from multiplying the value of USD, yes.
So you won't divide it back in that manner, correct?
You would split it back that way? Sure. Here's an expanded version of your text. Okay, next. You can delve into discussing the current backlog. This backlog, if you carefully calculate this specific transaction, based on the broker's detailed models, estimates that the overall cost of this transaction should be approximately around 11 to 13 times the projected EBITDA for the fiscal year 2024. So is it considered expensive in the current market? I think it's not particularly cheap, but whether it's deemed cheap or not could be beneficial for Cheung Kong's overall strategy and future growth. Yes. As everyone is aware, if you take a moment to look back at the detailed announcement, Mr. Liu, the co-managing director, clearly emphasizes that this particular matter is absolutely not political in nature. He even insists on stating that it has nothing to do with the recent political events and discussions surrounding the important Panama Canal. His insistence is notable as it aims to clarify any misconceptions that may arise during such politically charged times. He effectively eliminates certain political risks that could arise. Do you genuinely believe him when he claims that it's completely unrelated to politics? Perhaps it truly is, or maybe it's simply about the numbers, but the undeniable objective outcome is that he has chosen to withdraw from a situation that carries significant political risk. This conclusion is an objective fact that cannot be overlooked.
However, if we talk about the various political considerations that come into play, we might need to go back a bit further in history. Why is this issue related to politics? It may be because when Spring first came into power, there were notable speeches that emphasized how the Panama Canal was constructed with substantial financial contributions from American taxpayers, highlighting the intertwined nature of international relations and domestic politics. It was built with the dedicated efforts of Americans. Yes, even if we paid Panama, it was not given to China. Why should it be given to China? Therefore, we need to reclaim the rights to the Panama Canal.
So, the usage rights and related regulations, is it because of this specific situation? In reality, all countries have access to it because the Panama Canal, is located in Central America, making it a crucial international trade route. North America is an important area, right?
I checked it on Google.
It's not located in North America because that region consists only of Canada and the United States, which are just two countries.
Yes, I'll keep looking. Go ahead.
Actually, it's located in Central America. The Panama Canal serves as a crucial maritime passage facilitating international trade and navigation, right? Am I correct in my understanding, Google? Hey, take a closer look at the location on the map. Yes, look at the location on the map. Imagine if you were looking at the detailed map right now and suddenly the Panama Canal were unexpectedly blocked for some reason. What alternative routes would you consider taking to ensure timely transportation of goods?
You would indeed have to take a longer detour, right?
It would definitely be the Atlantic Ocean, since it connects the Atlantic and the Pacific.
So I would have to go around the Atlantic to Argentina, Chile, and Bolivia, taking a long route through South America.
This situation would significantly impact global logistics and directly affect the economic and strategic interest of the country involved, which is clearly the United States of America. If you decide to conduct a thorough scenario analysis, it's essential to consider the current geopolitical situation where U.S.-China relations are so significantly strained that there is a real possibility they could exert control over the canal, impacting global trade and security. There are significant strategic oppositions at play here. As a company based in Hong Kong, do you believe it would be possible for you to refuse orders or directives coming from the Chinese government? Additionally, refusing directives from the United States may not be a viable option either, considering the complex geopolitical landscape and business relations involved. For instance, a Chinese company operating in Panama is not required to adhere to U.S. directives or regulations, but if their business activities have a global reach, they could face significant risks or threats related to their operations in other countries. This could include potential legal challenges, trade restrictions, or geopolitical tensions that may arise from their international engagements, impacting their overall business strategy and success. But if you are a company based in China or Hong Kong, you might face unique challenges and opportunities.
They might use coercion or apply pressure to persuade you to do something without necessarily resorting to threats against your business or its operations.
They definitely possess legal avenues and methods to effectively control you. This situation presents a notable political risk, correct? It's not solely a straightforward business decision. Well, because of this, they can escape the turmoil. And everyone is very happy. The market is very positive. So the market is positive to the point that they think they will distribute high dividends. Because this causal relationship is another matter. Yeah, you use the high price to sell, so you need to have cash back to distribute high dividends. I want to ask you something unrelated to avoiding political risk for high dividends.
Yes, first, they are anticipating a significant sum of money coming back to them soon. I just want to ask, even if they might have this cash coming back, can they still choose not to distribute dividends?
They have the right to do so, of course. But if they hold so much cash, shareholders will definitely question why they have such a large amount and aren't distributing it. And if they're not investing, what are they doing? Are they just holding deposits? If I acquire a company, I may treat it as deposits. Investing in an MMF seems pointless then. Investors will certainly think this way. Concerns are being raised about the company's management decisions. Yes. I also don't believe that Tao E would simply keep cash on hand. Holding cash is essentially equivalent to valuing my market worth in liquid assets. So actually holding enough cash boils down to a few things. Either distributing special dividends, reducing debt, or making new investments.
But Hong Kong doesn't have a huge debt, right?
Well, there is some debt, over 200 billion, I think. But it's not a substantial amount for a property developer. It's a large conglomerate, yes, with diverse business interests. Now, considering the current cost of capital, they might strategically decide to reduce some of their debt or engage in various financial maneuvers to optimize their situation. However, I firmly believe that Hong Kong isn't in a difficult position at this moment, especially with over 100 billion USD in their reserves. What exactly do they need such a large amount of capital for? The current circumstances at home are unfortunately compelling them to sell this valuable asset, you see. However, if it is not absolutely necessary, they might choose to simply maintain the cash flow instead, preserving their financial stability. Political risk is a major concern. In fact, if you take a closer look back at the historical records, both ports have been subjected to continuous scrutiny and thorough investigation by the authorities in Panama, which includes a series of detailed audits and comprehensive checks to ensure compliance and operational integrity. This scrutiny highlights the ongoing efforts to maintain high standards and accountability within these critical logistical hubs.
After BlackRock acquired these strategic ports, they will hold a substantial ownership stake of 90%, while the remaining 10% will be retained by the Panamanian government. This arrangement clearly indicates that neither Hong Kong nor China has any involvement or influence in these operations, emphasizing BlackRock's significant control over the port assets in Panama.
But they really have nothing to do with it. The buyer in question is Backwall, which is a well-known investment fund based in the United States. But are they truly an adversary of China? No, they have consistently been a loyal friend, actively supporting China's economy. Certainly. Here's the expanded version, yes, and this situation also reflects the typical practices of Hong Kong's controlling family, specifically Mr. Li, as well as their customary approach to carefully selecting potential buyers for their properties. However, I am not entirely certain if they intentionally chose this particular buyer, or if it was merely a coincidence that led to this outcome.
We don't have any information about whether there were additional bidders in the process, but regardless of that uncertainty, this news is now public. We will be able to observe if it truly brings something unique and beneficial for everyone involved in the future. Speaking of special returns, just before the show began, I was having an insightful discussion with AY regarding the potential benefits of purchasing some stocks, specifically for their dividends. We pondered whether this strategy might be a wise decision, especially since there hasn't been any significant news or developments in the market yet that could impact our choices. Hey, when discussing tariffs and taxes, it appears that there are various economic forces pushing to continue raising interest rates in the U.S., rather than opting for cuts, which could impact borrowing costs significantly.
So if the U.S. Federal Reserve really does proceed with raising interest rates, would purchasing bank stocks primarily for their dividends be a wise investment strategy? To provide clarity, let's first delve into the various causal relationships between interest rates, bank profitability, and dividend yields that could influence this decision. The main tool for central banks is monetary policy. What determines when rates are high or low?
When the economy is weak, central banks typically lower interest rates to encourage borrowing and investment. Conversely, when the economy is overheating and growing too rapidly, rates are raised to cool it down. Economic overheating generally leads to inflation, which can erode purchasing power. This fundamental concept is crucial for everyone to grasp in order to understand economic policies and their implications.
Secondly, if this trend of rising prices continues, the central bank will always interpret inflation as an indication of an overheating economy that requires immediate intervention, and the financial market will also interpret it in that manner. However, over the past decade, inflation has predominantly been driven by an excess of money circulating in the economy, chasing a limited supply of goods and services, which has created imbalances that contribute to escalating price levels. This is the first key point to consider. The second important point is that supply chain disruptions are connected to economic overheating, but the relationship is not direct. Therefore, if the Federal Reserve or other central banks choose to employ monetary policy measures to address this complex issue, it's akin to treating a persistent cough by merely eating candy. Ultimately, it doesn't provide any real or effective relief from the underlying problem. Yes, that's true, but the issue arises when you have a friend who is coughing. If you genuinely want to show your concern for their well-being, you might consider giving them a piece of candy, believing that this small gesture will help cheer them up or provide comfort, thinking you've done something meaningful to support them. The Federal Reserve has indeed been actively engaged in doing just that. This is an important story you truly need to understand. Now, the tariffs currently being discussed have the potential to lead to two significant outcomes. First, they could exacerbate existing supply chain disruptions, which in turn could contribute to rising inflation rates. Second, they could increase overall business costs, impacting profitability and potentially leading to higher prices for consumers. This would significantly increase overall business costs, which would consequently lead to lower profit margins, potentially resulting in an economic recession. If inflation simultaneously rises alongside this recession, we encounter a troubling economic phenomenon known as stagflation. Yes, stagflation. In this particular situation, if we choose to follow a continuous economic model, you might observe the emergence of superinflation, which would inevitably lead to the necessity for implementing further interest rate hikes to stabilize the economy and manage inflationary pressures effectively. Now they're tightening interest rates. Yes, they want to raise rates, but you can imagine that raising rates in a weak economy is basically suicide, right? Because there's no economic overheating. The reality is that the economy is currently experiencing a recession, and situations like this can be quite troublesome for many investors. So what specific stocks should we consider buying during these uncertain times? Now, if this specific assumption holds true in our analysis, income-generating stocks will be the first to feel the impact because very few investors have sufficient funds available to borrow for engaging in arbitrage opportunities. In the past, we had the opportunity to borrow money at 0% or extremely low interest rates, which was quite advantageous. Then I would invest in income-generating stocks and earn the interest spread. And because of this, many income-generating products have seen their prices rise, which means interest rates are falling. So what's the current yield on the US 10-year Treasury? About 4%. Yes, this refers to the risk-free rate, the only benchmark interest rate. This means that many products in the market yield above 4%. This also indicates that the market for these income-generating products isn't very robust because everyone is anticipating a rate hike. Is banking a good choice? Of course, during a rate hike, the interest spread will widen, which benefits banks. However, if you carefully consider the implications of reversing the current interest rate environment, particularly in light of the potential rate hikes in the US, it becomes clear that the decision hinges on a fragile economy, which ultimately is not a reasonable or sustainable approach for fostering growth and stability in the financial system. This will likely lead to a decrease in the overall profits of the banks. In this particular situation, it could actually turn out to be quite beneficial for you after all. It's challenging to make a definitive statement. Therefore, I believe I will adopt a more neutral stance on this matter. However, if your primary goal is simply to earn interest, then investing in bank stocks can be considered a relatively safe and stable option. In Hong Kong, this is generally proven to be true, but you should exercise caution when it comes to investing in US bank stocks, as they can be more volatile. Because if you closely examine the situation, traditional merchant banks or retail banks often struggle to generate substantial profits in today's competitive financial landscape. Investment banks often present various opportunities for career advancement. For instance, Goldman Sachs is a notable example. They tend to lay off employees annually, typically reducing their workforce by about 3 to 5% each year. This trend reflects the competitive nature of the financial industry and the need for constant efficiency. They consistently eliminate weaker performers, retaining only the top talent. They consistently cut the bottom 3 to 5% of employees each year as a performance measure. They get eliminated. However, I just saw some news today indicating that they will begin this process earlier than usual this year, as it is typically conducted in the second quarter. However, this time, it seems that it might occur within the first half of the year instead.
Yes. So if you say that Goldman Sachs is publicly releasing information about potential layoffs, it shouldn't be overly interpreted as a definitive sign of a struggling economy. It's simply part of the company's established pattern and business strategy, which sometimes includes workforce adjustments.
Early action indicates an impending economic downturn. But in reality, they are merely a quarter early, specifically 3 months ahead of schedule, indicating that they are attempting to manage and sustain their cash flow effectively during this period.
The primary reason I am considering the fifth bank is that when evaluating all the various bank stocks available, this particular bank appears to stand out as the best option based on its overall performance and potential for growth. For example, let's take a closer look at what the Hang Seng Index is currently doing in the market today. I didn't make a mistake. This is indeed the ETF we are discussing. My apologies for the confusion. It's currently 11. Now let's take a closer look back at the Hang Seng Index, specifically at 107. Additionally, I previously came across some information that highlighted concerns regarding Hang Seng's bad debt ratio, which could be significant.
It's not particularly surprising when you compare it to HSBC, is it? You have a significantly higher number of cases, a larger volume of commercial loans, and also an increased amount of mortgages tied to Hong Kong's assets that are being lent to the mainland. All of these factors combined contribute to a greater incidence of bad debts within the financial system.
Furthermore, the reason the 5th edition is being released is not solely due to the improved appearance of the chart. It is also significantly influenced by discussions and mentions on the message board, which have highlighted its importance and generated interest among the community. People are saying that HSBC is celebrating its impressive 160th anniversary, so they definitely wouldn't want their stock price to decline. Perhaps shareholders might consider buying back some shares to help push the stock price back up to the 100 range or even as high as a 160. Because for the 160th anniversary, they simply won't hold back. So now everything you have is sold out.
It seems like everything in the market is being speculated on. Unfortunately, things have calmed down significantly. Everything seems to have returned to WeChat, which is a positive development. However, the price has risen far too quickly, and every day it appears that the overbought conditions in the OC are becoming more pronounced, so a correction in these positions coming back down is quite normal and expected. Absolutely. You see, 288 is actually quite impressive indeed.
I meant to mention 288, but mistakenly referred to 288. Zara is 125. Wow, it's actually quite nice. 228 is completely all white. However, when considering the color rate, one option appears to be more significant. For instance, HSBC is likely to have a higher rate, approximately around 7% or close to 6.75%.
2088 is only about 2.3, yes, just slightly over 2. So it's not a significant amount, and in comparison to that, HSBC is much more generous. So the second-tier banks have consistently focused their efforts on various emerging markets. Of course, there are certainly more opportunities available, but the potential risks involved are also significantly higher. Please remember that the US dollar is very likely to remain strong in the upcoming financial period. In this specific context, I would definitely choose the US dollar.
Why is that? I want to ask.
In your business operations in Zimbabwe, Indonesia, South Africa, or more broadly in emerging markets, what specific practices or policies do you accept and implement to ensure success and sustainability? You wouldn't accept US dollars, right? Oh, you wouldn't accept US dollars. You would accept local currency and then convert it to US dollars.
Oh, so when the currency is weak, the US dollar is stronger than usual?
This is just basic arithmetic that anyone can understand, but what's even more crucial to note is that your local economy is significantly affected by the ongoing issues related to the weak currency.
In contrast, I find that smaller banks such as Dashin and this 440 are consistently experiencing growth and rising in prominence, though I'm not entirely sure why this is happening, as they seem to be outperforming larger institutions like Hang Seng. Interestingly, while they may not have as many physical branches to serve customers, it appears that people might not be inclined to borrow from Dashin right away, possibly due to a lack of awareness or perceived risk. Will they?
Their business scale varies significantly. Historically, Dashin has consistently offered much higher interest rates compared to others.
Isn't that the Dasing Bank? The number is 232356. Let me check it now. The interest rate for 2356 exceeds 100.
The index is consistently higher than Hang Seng. The Hang Seng index has consistently been a bit slower to rise. Dasing Bank's stock has long been a subject of speculation regarding potential purchases, but that is no longer the case. Currently, you can no longer buy the stock at its previously high price. Previously, it was rumored that the stock would be sold at 2 to 3 times its price-to-book ratio, which drove its price up significantly.
So during our next meeting, we can delve deeper into the topic of dividend stocks and explore various ETFs. We can set aside time to discuss ETFs in more detail next week. Additionally, if anyone has specific questions regarding ETFs or how to effectively invest in them, we can engage in a thoughtful conversation about the best strategies and practices for investing. Everyone is welcome to leave their thoughts and comments on our YouTube channel. We genuinely want to know what topics you would like us to discuss. Based on your suggestions, we will gather relevant information to share with you in the upcoming episode. So that's about it for today's discussion. Thank you all so much for joining. All right, goodbye, everyone.